Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is May 6, 2016. It is 9:02 a.m. Eastern Time. For those of you that are here for the first time, we want to welcome you. And for those of you that are back, welcome back. Very interesting week, very interesting morning. We're about to take a look at the calendar. But before we do so, let's go to a disclaimer, and then we will proceed. Disclaimer. Feature stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website or presentation is neither a solicitation or an offer to buy or sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance indicators or methodology are not necessarily indicative of future results. And let us begin. So it is Friday. It is non-farm payroll. The numbers are out. We got one more coming up. That's 10 a.m. But all numbers for the U.S. and Canada are out. Employment change for Canada came in less than expected, 2.1%. Unemployment rate for Canadians is at 7.1. Pretty much stayed intact as expected. U.S. hourly earnings month on month actually increased since last month. Non-farm employment change. I see here that we have 160,000 jobs that were added, where last month there were 208. So that's significant. Not a big drop, but it's significant. Unemployment rate is stable right now at 5%. And we're going to get producer manufacturer index from Canada coming out within the hour. And that should be it for the day. So let's go and see what the charts have for us. So NFP, let's take a look at this. This is when it began. It opened up, went long, came short. This is the euro. And right now, they don't know which way to go. Boy, they are in a quandary, aren't they? Analyzing this, I mean, anyone that would have traded this would have gotten killed, slaughtered, beaten, served in many ways. The question is, where's the trade? Now, that's a good question. See, when they went up and they pulled back down, I like the fact that the point of control of the candle for the sellers is up here and the buyers is here. That means the buyers were no longer interested in buying, and that's why they came back down. Of course, now they did the same here, but then they came here and they pulled right back down. Of course, now, see, this one has a little bit more value to the upside, and the reason I say this is because they're trading above a weekly level, which is 114.20. So if we were looking for a trade here at this point, I would be more comfortable actually going long than short. And the reason I say that is very simple. It's not logic, it's numbers. Everything that we do here is mathematically based, mathematically driven, mathematically analyzed. Our algorithms basically are telling us, number one, that they are using the 200, the 100 as a mean. They're using the weekly level, which was identified in a higher time frame at 114.21 as a support level. They initiated early in the morning, and traded right between it and above it. They went high, went low. They're here now. This candle, as you see it here, because it closed, even though they did this, this move of despicable nature to the upside and then pulled down, this candle that you see here, this red one, I'm going to show you something right now, which is the secret behind the encryption of their order flow. We're going to put the volume indicator. And it is by far the most deceptive way of trading that they have come up with. But here's a problem with them. We've cracked their code, and we don't care how deceptive they can be, because we see right through the smoke and mirrors. Sometimes it's important to understand that what they are doing right now is, I'm going to take this up, come on, there you go, good job, right there, buddy. Okay, you see this candle right here? See how bearish it is because it's red? See how it's settled bullish with bullish volume? And I'm going to show you the volume because this is their secret. It's a signature trade, and I love them for it because they're so stupid. But we've cracked it. 151 on the buy. No, this one right here. Forgive me. 623 million on the buy, 594 million on the sell, in terms of 30 million bullish volume. So why is this important to understand? Well, the reason it's important to understand is because what they do when they set up for a trade like this is that they bring in all their high frequency trading here. They throw the kitchen sink, and what happens next? They will eventually decide a direction they're going to take in the trade. Now, when they do so, you're thinking, oh, they're going to go short because this is red, and they just pulled up and pulled right back down. But see, this one didn't have it, or it did, but then this one came in and maintained above. This one never closed below the weekly level. This one closed below the weekly level, and so did the point of control for both the buyers and the sellers. Why is that? This is the secret that you cannot see without our technology. This is why we are starting to break down their algorithms and their encryption one trade at a time. Because we have been able to, through a program that we developed that does frequency analysis, we've been able to determine that when they do this, it is to confuse the mind of the individual, because remember, you're trading against a robot, and to play with your emotions. Everything is psychological now. They're doing everything possible to use your own mind against you. It is sad how deceptive this has become. So now, even though you can see how they do this, they go up, they pull, and they come down again. This trade, I would have expected this trade to make a bigger move, and this one didn't, unfortunately. But they're still playing here, so I'm not sold on a short trade yet. I'm more comfortable with a long trade. Again, my only reasoning is because of what they did here. This one had a better reaction than this one. This one is, when you have this type of imbalance, then normally you have continuity. But when you don't have an imbalance in a candle like this, and they do so, and the imbalance is between the point of control and the body of the candle where it settles, and the fact that it was a bearish candle originally, but settled with bullish volume, then that makes a difference. Then usually the next candle should continue. If not, then what they're doing is that they come back and retest. But at the end of the day, the decision has already been made. And their decision will eventually be to go bullish, not to go bearish. So even though it's coming against us and we're down 7 pips, bottom line is that this is the trade that they do. They come back, they retest, and if they don't come back all the way down here and they basically trade off of the 200, then that's it. That's what they're doing. It's very simple. It's a simple strategy, cut and dry, but it's very effective. And you can see how they did it here. See this candle right here? See how the body of the candle closed up, even though it was originally a bearish candle, but it settled bullish. And you can see that the point of control, same signature move. the same signature move. This is what they're doing to confuse you guys. They're not confusing me because I have technology. I understand what they're doing. But they're doing it to confuse everyone else. They did it here. See, this was a bullish candle originally, and it settled bearish. Ouch. Hurt someone. And they do. They hurt a lot of people that don't understand this, because we are now dealing with professional chess players. These are robots, and every decision that is made by them is thought out 10, 12 steps ahead of ours. So they're thinking 10, 12 steps ahead how we would think, how we would react to such price action activity in the candles. And so they're basically trading off of our fears. And sometimes, you know, like I said, sometimes they'll play it out and sometimes they won't. And it's okay. I mean, if I know that a trade is going to go against me, then I need to know why it's going to go against me. I need to understand what is their reasoning, their logic, and their plan of action. If I don't understand that, I can't trade. But if I understand that, then I can break down their trading strategy and design technology around it in order to beat them at their own game. And that's pretty much it. So even though this pulled back, all they did was retest. That's it. Because this level right here is a doozy to break. The fact that they broke it and then pulled right back above it after they had already decided to go long. I mean, they did go long, make no mistake. But they didn't do anything else besides that. They went up, pulled back down, said, nope, we're not going below this level. We are going to stay above this level. This is why it's important to map out the levels in a higher time frame. These power dot levels that you see here are in higher time frames that I teach people to identify and look at, and I teach them to map them out. Why? Because they're very significant. They're the chessboard that you need to understand the next move of your adversary. This is not an opponent. This is an adversary. They're looking for one thing: to beat you every time. And they know they can, which is unfortunate because you're walking into a game that is already rigged. It's rigged against you. You just never knew it. You know, it's funny how the regulators, you know, easily just clean their hands and say, well, you know, there's a risk of loss if you trade in speculative markets. Well, of course there is, because these bastards never regulated the banks in order to make a true and real fair playing field. They control the money. They control liquidity. They make the rules. Well, if you understand the rules, then you won't get burned by them. Knowing how they play, when they play, that is worth more than anything else, because then you have a shot. Without it, you have nothing. All you have is loss after loss after loss after loss. Where here our batting average is about 95%, and we win. You know, this would be considered right now one of those trades that if it didn't react within the first 20 minutes, then 15 minutes, then we'd be out. And right now, realistically, because it's not reacting, I'm not really considering staying long. I mean, I'm giving it this last candle. If within this last candle I don't see what I'm looking for, and this is what I'm looking for. Whenever you see this, anticipate volume divergence. If volume is basically diverting to the upside, then I need to see continuity of price action, and where it's settling here, I need this candle to settle with bullish volume. That would be the most appropriate thing for me to say, I'm going to stay in this trade. If I don't see it, then I have two things going against me. Number one, I have price action and volume going this way. These two concepts cannot exist. Now, when you have this, you have to wait for them to tell you which one is right, which one is wrong. My whole reasoning of going long on this trade is very simple. I wanted to go long based on the fact that they had used the 200 and the 100 as a mean right around a resistance level, which was on a weekly level at 114.21. And also because they had earlier set this up to trade above it before the announcement. And when the announcement came up, they came up, pulled, came back down, used it as a support level, and then settled right above again using the 200 as a mean. See, we don't use moving averages here like everyone else does. Everyone else is looking for a moving average cross. They're stupid, they're idiots, they don't know what they're talking about, and they are what I call false traders, false educators. They're looking to scam you, and they're looking to sell you something cheap. I'm not cheap, I'm expensive, but I know why. And I can explain and break down every move they make and tell you why. And if you can understand why, then you can trade why. So you can understand X. The X factor is not going to burn you if you understand it. But if you understand the Y factor, then you can take accountability for a trade. And that means that if you take a small loss, and you take a small loss, you're not going to cry about it. See, here at this point, this trade isn't playing the way I want it to trade. Volume-wise, I'll show you how the volume's coming in on this, which is bothering me. You have 222 million on the buy, 252 million on the sell, difference of 28 million. Now, that difference is our excess orders that haven't gotten filled. And you can see how the bulls are starting to come on. You know, now you have a net of 18 million when it was 26 million at one point. But you have the candle not doing anything. See, it barely moved a pip right now. The difference of suddenly it moved 1 million down, and then, you know, price action moved. Well, this is important because you want to know who's in control. You want to know how their algorithm is programmed to react right now. Is it reacting to the negative volume more than the bullish volume, or vice versa? Like I said, this concept and this concept cannot exist. So we have to wait to see who's right and who's wrong. Now, when you have this right here, and I'll change the color to this because I think it's important. When you have divergence, volume divergence, and price action divergence, then you have the real trade. But you have to wait for it. At the end of the day, what it comes down to is really letting them tell you the trade, which way they're going to go. I like this one more than I do this one, only because of the way that they settled here. But I didn't like the way this one settled. I needed this candle, this third candle, I needed it to go up. Instead, they used the same pattern against me, and now they've come down. But normally, after a move like this, and with the amount of volume that they did here, this is a retest. And they will normally come down and retest the higher level, which in this case would be a weekly level, or the trend stop, where the mean is right at again. So if they don't go below this level and they bounce right back up, then I have what I'm looking for. And now, if I look at the volume, the net is only 4.8 million negative. So that means that the bulls had started to come in, but the bears are still pushing down. You got 69 on the buy, 82 on the sell, 72 on the buy, 82 on the sell, 86 on the sell, 73 on the buy. And again, we're looking to see how price action reacts. You know, this candle, for instance, was 248 million on the buy, 255 million on the sell, difference of 5.8 million. negative. It did close negative, but right at the point of control, which is not a good thing. This candle needed to close here, not here in the middle. And so now, if this candle does exactly what it is doing right now, which is basically trading off of the mean, off of the trend stop, and just maintaining, then at that point, this will be the final retest, and then we should see a move to the upside. Our risk really should never be more than 15 pips max on a trade. There are trades that we've taken where our risk has only been 5 pips. We've nailed this thing down to a 5 pip stop loss. All it is just time. Understanding the protocol, the rules, and if you understand the protocols and the rules, then basically, if you are a mathematician, if you're an economist, if you're a professional trader, then you can design your own strategy around it. Here's the problem. This thing has taken us years to develop. We've done all the homework for you. We've read every financial paper that PhDs have done on algorithmic development, financial trading, and financial modeling. So we've broken down every strategy that they could possibly use, and we know the ones that they love to use the most. And that's why we're able to do what we do now. We've been able to counter, program, create technology that actually works and gives you an edge versus old outdated indicators that you've been using that have produced trade after trade, loss after loss. Why? Because the market's very tricky. Did you know that now they have the ability to come in, move the market, and then pull liquidity? Like right now, see, they moved the market, came in with a tremendous amount of liquidity in all these candles, and then suddenly they pulled liquidity. On this candle, you had no liquidity here. Liquidity came in, but no price action. This candle didn't reflect the 248 million or 255 million. This candle had 71 million on the buy, 95 on the sell. How is that? And this one had all this volume and it didn't break below? Do you see what that means? This is what we call currency portfolio rebalancing. Why? Because they need to get out of their negative orders before they take the market up. That's what it is. They have to balance out their risk. This is all about risk management. But that isn't their plan of action. Oh no, their plan of action is another one. And so at the end of the day, if you understand what they're doing, why they're doing it, how they're doing it, then you're not going to be afraid when they pull liquidity, range trade, and then make the move. Like I said, those two concepts cannot coexist. Once you have the real move, it will reveal itself. Now, since we have all this bullish movement that came in here, in this candle, you have 199 million on the buy, 200 million, 162 on the sell, you got 39 million bullish, 40 million, and 41, and climbing. We're at break even now. The next candle must open at the height of the close of this one and continue to the upside. And if we have that, then at that point, we have our trade. If we don't, if we see that the next trade comes down, and see, here's the beauty behind this candle. What this candle just did is that this isn't luck, guys. This is pure mathematical reasoning. See what this candle did? It broke above the trend dot. Now, I know that some of you are new here, and I haven't really had the opportunity to explain how the indicators work. We have videos on YouTube that you can go to. Here, let me do that real quickly for you. You can go to YouTube, type in Phoenix Trading Strategies, go to the channel, and take a look at these 3 videos right here. These will explain everything. Nice detail. You know, we like to provide proof. At the end of the day, all that matters are results. Words mean nothing without results. Are there any questions? This would be a good time, guys. It's okay to have a question. If you don't have a question, I understand. But this would be a good moment to have a question. Now, see what this one did? It's proving that volume divergence is to the upside. It's a high frequency candle. Why is it high frequency? Because the bar is now magenta, even though it's a bullish candle. What it means is that they've thrown the kitchen sink at this. 254 million on the buy, 205 on the sell in terms of 50 million. Here's what I don't like about this candle right now. If it closes below the trend dot, and this is the trend dot right here, then at that point, that means that they're using the trend dots as resistance levels, and this is going to go down. And that means that I'll take a minor haircut. I'll take a small loss. But I'm not losing 20 pips. I'm losing 7, 6, maybe 8 pips max. So as this candle has 2 minutes, I need to see this candle react to the upside. If I don't see it react to the upside, and I'll wait for the next candle. But I'm pretty sure that what they're going to do is that since they went up and did not maintain, and they were supposed to maintain up here, then what they're going to do is basically they came up, retested the point of control, and closed right below the trend dot, and that means that the next candle should be bearish and come down. Again, if you know what's going to happen, then you can plan for it. If you don't, then you can't. Understanding what the trade is doing versus not understanding what the trade is doing, what their algorithms are doing, is more detrimental to you. So, and when they do this, it's okay. I mean, it has happened. It isn't the first time. It isn't the last time. But you know what? I'll make up these 9, 10 pips that I'm down very easily in the next trade. And so since they did that, which is a no-no, this is a no-no, that means they've got to come down. So now, unfortunately, it puts me in a quandary because I could reverse my position and basically just let it come down. But the problem that I see here is that they're trading within a range, and this range is something that I cannot, in a good conscience, just take another trade and say, oh, I'm just going to go down. No, because I had volume divergence. This concept cannot exist. This candle still settled bullish. So I have to give the next candle the opportunity to move. And if the next candle comes up and retests but doesn't break above my entry, then I'm out. And I'll take a small haircut. Do you see the difference between understanding what they're doing and not understanding what they're doing? These are all little details, key factors that you learn with us. You know, the beautiful thing is that we don't subject our moves to emotion anymore because they don't have any emotion. That's what people don't understand anymore. It's hard for me to explain because, you know, I trade this thing all the time. And sometimes they do things that, you know, trigger emotions in me as well. And I'm experienced, so I can imagine what it does to others. But at the same time, their decision process is single-minded. And it already has been programmed to do one thing. And once you identify that one thing that they're going to do, they follow through. They deliver the goods and then some. And like I said, at the end of the day, it comes down to one thing. Just wait for them to give you the trade. They will give you the trade. You know, the nice thing about NFP is that they throw the kitchen sink in volume on this thing. Oh my God, it's like they have nothing better to do. It's the one day out of the month that they excite everyone. And sometimes you make a few pips and sometimes you don't. At the end of the day, it really comes down to just, this month I decided, I forgot that they were going to trade early. And number two, I thought about it and I said, do I really, really want to do this and get up that early to see what these idiots are going to do when they're basically just going to crush everyone at the announcement? Maybe I just need to wait and go in for a few pips and see if I find a trade that I like. You know what that's called? Trading on your terms, not theirs. See, they want you to get emotional about losing money. They want you to think that you can make money. Then they come in, they slap you, beat you, submit you, demoralize you. Then you take your beating, you go home and you're like, oh no, what am I going to do? I should have never taken that trade. And you're right. Every emotion comes in to betray you, to tell you that you can't do it. I can tell you that you can do it. That it is possible to beat them at their own game. It just takes time. It takes a learning curve, and it takes the right technology and the right education. If you don't have that, then you don't have anything. Then you shouldn't be playing at all in this game, because the only thing you're going to be doing is losing money. Trade after trade after trade after trade, and they know this. They have programmed to basically trigger one thing in your mind: fear. And once they trigger that emotion in your mind, they know that they've won. See, there's no fear in my decision process. Like I said, I understand what they're planning on doing. However, this candle sort of put them in a quandary. Why? Because it's settled, even though it was a bearish candle, it's still settled above the point of control, and it's still bullish because it's settled with bullish volume. As for this candle, I'm still waiting for them to make the move because they're trading right around this pivot. See this pivot? This one and this one? This is the resistance level right here. Once it breaks this level, then it has to go to the next one. This is a real good example of seeing them trade right now when they pull liquidity. Because sometimes when they pull liquidity, we fear what can happen next. And they know this. They've programmed against it. See, the next pivot is 114.37, which is basically 8 pips away from where it's at, 6 pips away from where it's at, which is where our entry is. Once it breaks that pivot, here we go, all the way back up. But they're going to take their sweet time. So I think we're going to have to go look for something else. But I think this was a great example for you guys to understand what they're doing, why they're doing it, how they're doing it, and how you don't have to fall victim to it any further. It's a shame we couldn't have found a better trade, but see how this is settling still with bullish volume. Again, my only concern is that they're using the trend dots as a resistance level. And that means that the next candle could be bearish. That's all it means. But the volume in this thing is right now, we see 192 on the buy, 191 on the sell, 192 on the buy, 196 on the sell, 196 on the buy, 200 on the sell, 203 on the sell. I mean, the 204 on the sell, the bears just don't want to give it up. 207, 208 on the sell, 210. I mean, look at that. As the volume comes in, here's what they're missing. Price action isn't trading in their direction, even though it is bearish. You got 203 on the buy, 214 on the sell, 210 on the buy, 215, 212, 218. Every time that the buyers come in, you have price action moving that candle. It's only down 3.4 million negative, 220 on the buy, 231 on the sell, 233 on the sell, 234 on the sell, 235 on the sell. 238 against 220, 239. Didn't move anything. See, with all that negative volume, this thing should have crashed, and it didn't. With us, you can actually see the volume as it's coming in to understand what they're doing. You can see their buy and sell orders coming in. And this is Forex. You shouldn't be seeing this. This is information that you should not be privy to. They don't want you to see this, because they know that if you see this, you can understand what they're doing. And if you understand what they're doing, then you can beat them. You got 3 minutes left on this candle, but again, it's not doing what we needed it to do. You know, it's 236 right now against 237 on the buy, 262 on the sell. They're still holding. 245 on the buy, 271 on the sell. 246 against 276. And again, the only problem that we have here is that there's just not enough price action. There's volume. Here's the difference. They have volume, but they've removed two other elements from the trade: momentum and liquidity, to move this thing. That's what they've held. Liquidity. And because liquidity is down, you don't have any movement of price action. And now I'm getting bored with this trade because it's really annoying me. Like I said, I would have expected it to move by now, and it hasn't. And so I don't mind taking a haircut of 11, 12, 10 pips. We'll go play somewhere else. This one didn't do anything, but we'll make it up. You'll see. Let's go see who's playing. And that's the beautiful thing about the market analyzer, is that you can put everything in. This will tell you if you have power dots, if you have price to congestion, the way you have it here. The pound Swissy looks like it's in play. Let's go take a look at the pound Swissy. Now remember, we're looking at this half hour before, 20 minutes before an announcement. And all the news from the US is gone. Now that doesn't mean that the trade is over. That just means that they haven't decided what else they're going to do next. That takes a minute because of the volume indicator. It takes a lot of data, because we're using tick data. So do you have any questions? Are you confused? Are you concerned? If you're confused and concerned, that's good. That means that you understand. Okay, so we have power dots here. They came back all the way up. We don't have a trade here, and this is a 10-minute. Unless they close below this and they do what they did here, but they still have the ability to continue to move up, which is not a good thing. Volume divergence was here to the upside. And again, we just don't have, you know, if I don't have a trade, if I don't understand the trade, then I'm not going to take a trade. I'm not interested. Now, sometimes these deceptive dogs will use a 7-minute. And the 7-minute will be much more clear than the 15, than the 10, and then the 5. We're almost there. Almost there. Okay. Oh, we have a gift. My God. Okay. See this power dot right here? This is a gift on the 7-minute. And whenever this bad boy appears, here's what's next. They either break through it or they use it as a price level to rebalance their order book. and basically as a resistance level to come right back down. So we're going to wait. You know, this is a good opportunity for us to see. Now, this candle is very important. Why? Because this candle just might be the one that shows us that there's volume divergence to the downside, but we still don't have enough information. That's the problem. This candle has less volume than this candle, so they threw the kitchen sink at this one, and let's see how much of a kitchen sink they threw at it. 354 million on the buy, 260 million on the sell. There was of 94 million. This thing should have exploded. It didn't. This one has 130 million on the buy, 82 million on the sell. There was of 50. Again, another candle that should have popped. It didn't. If this candle closes with negative volume right here, then we're good. So we just wait. This is where you wait for them to make the mistake of the century before you take their money. Like I said, there's only so many tricks they have in the bag. And once they throw all the tricks out, then they got no more tricks. There's no more deception. But here's where the hardest part comes in for you as a trader. To have patience and wait for them to give you the trigger. They haven't given us a trigger yet. Like I said, they could break right through it and retest the high of the day again, which would be up here, and they've done that. I've seen them do that. So I'm not sold on it yet, but let's wait. This just might be a good one to really just, you know, give them a run for the money. Let's see. There's quite a few that are setting up. New Zealand yen, Aussie yen, SPY, silver, euro yen, euro pound, euro Aussie, New Zealand CAD. I never trade that thing, but once in a blue moon, that son of a gun just gives really nice trades. So again, this one's a nice trade because when it moves, and the payout is really nice. I mean, they love to pay big time on this thing. But see, this isn't the trade. Even if they did this here or this, unless it closes with negative volume, and see, that's what I love to see right there. They're slowly coming down. Slowly coming down. I mean, they've thrown the kitchen sink at this. 237 million on the buy, 197 on the sell, 198. There's a difference, 201. See, the sellers are starting to come in. They're starting to set it up. So the minute this thing goes to zero in the cumulative volume and goes negative, then I know that we have our signature trade. Without it, we don't have anything. So this is a combination of mathematical formulas that we've done, algorithms, that have found an anomaly. What's an anomaly? A flaw in their communication, which is encrypted, but pure mathematically based. And see, now we got it. See, it's almost negative. Oh yes, come on, do the deed, because we want to take you down. Do the deed, give it up, go negative. Now see, we could jump in on this trade right here, but then if it goes against us, then it's not good, because then sometimes it's better to just wait. Let them confirm, let them play it out. Let them give you the right signal. And again, this is a 7-minute. See, we wouldn't have identified that there was a resistance level forming here. And they're trading right below the pivots. So everything is good. Sometimes we can be a little premature in the trade, but in this case, I think we can risk, if it's trading at 140.41, we can risk 6 pips. 43, bunch of Okay, so we got in at 140.42. Let's see. Remember, we want this thing to settle negative. At the end of the day, that's what matters to us. Because if it does that, they're in trouble. Oops. Let's see. Where we got in is right below this pivot. So long as they stay below it, we're good. Once it comes back down here, 5 pips, then we know that we're in good standing. Okay, so they didn't come down, but they did settle, and it settled with a negative number. Negative 900. That's all that mattered. Here they can retest and do all they want. At the end of the day, they have to play it now. Now this next candle is very crucial. This next candle has to be bearish. If this next candle goes bearish, then they lose and we win. Because now you're going to have 2 things in your favor. You're going to have the volume divergence to the downside and price action divergence to the downside. We call that checkmate. This is a digital chess game. They are using every pawn, every knight, every rook, the queen, and the king to make their play. This is not poker. Poker is one-sided. No, this is pure calculative trading. And they use your emotions against you. Because here's what happened here. When you saw this trade go long, and this is all the way up here, you're thinking, oh, they're going to break right through this resistance level. That's the first thing that came to your mind. I said, no. I said, oh, thank God we have a power dot that just formed right here. Why does that power dot appear? Because it explains 3 things: that there is volume, liquidity, and momentum coming into the market, which equal potential trade opportunity. Told you we would find the trade. Now, let's see how far this bad boy goes. The first candle, once they initiate the trade, normally there's a 20 pip move, 20 to 30 pip move, and then they stop and they range. Why? Because they pull liquidity. They did it here. They moved aggressively, then they chopped. Then they moved again. Well, this time they moved in our favor. So now, this candle is very crucial because we need it to come down 10 pips. If it doesn't come down 10 pips, then normally this candle will come and settle where this candle closed. Normally. That is what we're looking for. If it does that, then we win. And if not, then we pull out and we take out a few pips and no one's the wiser. Any questions? No questions? Really? You guys are really quiet today. I must do a really good job of explaining this. Now, if they do this trade in a higher time frame, in a 60-minute, then that's a 2-hour trade. And that means that the potential for pips is just huge. Now, I'm not going to tell you, but on futures, this thing is the bomb. It's explosive because since it is a centralized exchange, we do get all the correct volume from it. And it is just a gift from God. I mean, your prayers have been answered. What more do you want? It just doesn't get any more transparent than this. Like I said, understanding the rules of conduct, their decision process, and then having the technology to actually trade and beat them is like a gift. See, now we're back more or less to break even on that stupid trade of the euro that we took. Now we're in the green. Okay, so now let's see. I'm looking for 20 pips. That's what I'm looking for. I'm not looking for a big move. For me, 20 pips is more than enough at this point because they've outplayed themselves. And it would be a nice trade. Then we can go look for something else. But normally in the morning, you should be looking for 40, 50 pips each morning. We've done it many, many times. And if we can do it, you can do it. See, our motivation is very simple, to try and help as many of you as possible. At the end of the day, we all have one motive against these investment banks. It's called revenge in a very simplistic manner, but it's about money. Bottom line, it's all about money. We're motivated by one thing, money and revenge. They both go hand in hand. Now see here, I would have expected it to do more. It's not. It's still going, so I need to give the next candle the opportunity to continue. Normally we'll have 2 candles, which will basically drive the market. And if not, then basically we take what's on the table and move on. Now, what is it that I don't like about this trade? I would need this candle to come down, and right before this candle comes down, you're going to see a trend dot form right here. And they're using that information right now to basically settle this one as a support level for this to go back up. That's why I was hoping that it would break below this level, and it didn't. So I have to give it the benefit of the doubt. But look at how much volume they threw at this thing. 271 million on the buy, 327 million on the sell, jumps to 54 million. Difference of 52, 51 million. So again, we have a power dot again, you know. Now, because this trade did play out, they can come and retest. And I'm down for that. I have no problem if they come back and retest. If they retest and then fail to break above, then they've got to come down. And then on this next one, if not on this candle, on the next one, it will be a much more aggressive move to the downside. But remember, they're waiting for news right now. And so sometimes they already know the outcome of the news and the numbers that are going to be released. And so they set up for those trades in a very systematic, logistical order. No emotions. Just pure chess. Quite honestly, this has been the most beautiful game of chess I've ever played. If you haven't learned to play chess, you need to. Go to the library, take a book out, start reading. So now we wait. We wait and we see what they do. Remember, if this candle doesn't go up, it must come down. We call that gravity. Any questions, guys? This would be a good moment. No questions, really? I must have done a really good explanation today. So then all we have to do is just wait at this point. 3 minutes left. This candle should be closing soon. Just waiting, John. That's all we're doing. We're just waiting. Aviéntales la madre hoy y diles que quieres tu dinero. ¿Qué pasa? Así. Que esto no puede seguir. So see, we're basically now just waiting, 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 waiting. We're like a shark that circles the ocean, waiting, 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 waiting. And then finally we take a bite. Not the greatest example, but that's what we're doing. We're basically circling around this trade right now, waiting, 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 waiting. We know that we're going to eat. You're circling the kill. They don't know it, but you do. And we have 1 more minute before news. We're waiting, waiting, waiting. Happy birthday, sir.
Birthday.
Happy birthday. It's my 4-year-old. Well, actually, he's 5. He's turning 5 today. See, look at that. 1 minute left, and look at all the nonsense that they're doing. They're just making us wait. Wait, wait, wait. Give it up already. We know that you're going to give it up. Just give it up. We want to move on to the next trade. And we're waiting. Now, this is important. Where are the pivots? Here is one right here. Here are 2 right here. If they break below these 2, what's next? This one, 140.26, which they came down to. And what's next? This one right here. That's the beautiful thing about these pivots, is that they map out the next price levels they have to go to. We've even done that for you. The euro is going up, is it? Despicable. Let's go take a look at that euro. See, I wasn't wrong about that. I just wasn't happy about that setup. Let's take a look at it. And like, sometimes you don't need more than 2 trades. 3 trades in the morning and you're done. Move on. Say next. And there's no better feeling than winning. I can assure you that. Oh, great. Somehow they decided to spike against me. On that trade, I'm down. No, I'm up. My mistake. I was reading it the wire. Yeah, it's going right back up. Look at that. These stretchers. They came down, retested the level here. They did the trade. It settled bullish. And now they're going up. I still don't like this just because of all the nonsense that they did. But I don't like this setup here. You know, and they're just holding right now, which is really bugging me. So, but they did start to recover to the upside. But we were in it up here. So we would still be down right now, and they would have gone against us a bit more. Let's go back to the pound Swissy. Give it a minute. Okay, so see, now, since they didn't play our trade, it's time to simply just exit. Everything looked good until they until they held. I told you, this candle was crucial for it to come down. If it didn't come down, then it's okay, we exit. It's no big deal. We have to wait for them to give you the green light. They will either give you a green light or tell you no. Can this continue to go up? It can. Does it matter? Not really. Can we always find another trade? You betcha. Make no mistake. Everything looked good, but it didn't play out. Did we lose anything? No, we didn't. Let's take a look at that pound Aussie. Well, pound dollar's moving, so New Zealand dollar's in play. I'm curious. I don't know which way to go. This one's lighting up, telling me that it's trading around power dots. All right, let's take a look at the New Zealand dollar. Give it a minute. Give it a minute. We're almost there. Ya no te enojes. Es error de ellos. Y tienes todo el derecho, sí, y tienes todo el derecho de reclamarles. All right, let's take a look at this New Zealand dollar. Why would I not trade this is the question. Versus why I would trade this. Number one, it doesn't look clean. I don't have a clear path of direction. Let's see. They were originally bearish in this whole trade. Then they, of course, did NFP, came down. They're back here. No clear path of direction here on this trade. I don't like to get into a trade once it's halfway into it. The risk is too high. And at this point, this is a trend dot, not a power dot. Don't confuse. This is a power dot here, but the transition between bearish and bullish trend dots is also gold. So assumption is that they'll continue to go long because they're devaluing the US dollar right now. But I don't have a clear path of direction right now. And I don't like to get into a trade one. See here, when they did this, because it was originally bearish and then closed bullish, of course, I would have gotten in this trade to go long. No questions, and we'd be up 10 pips. But now I don't have anything. And so if I don't have anything, that means I must continue to look elsewhere. And there are so many nice options right now. Let's take a look at the US yen. Oh boy, let's give it a minute. Here we go again. Here we go again. Okay, US yen. What do we have here? We have a lot of chop. They initially came down at the NFP announcement. Then they went right back up, as you can see. They maintained, came up, chop, chop, chop. Are they going to continue to go long? It looks that way. Do we have a clear path of direction? Not really. This is called mean reversion. They're using moving averages as a mean. They go right back to it. We have a signal here to go short. They did not fulfill. It came down. Then, they're retesting. I'm not comfortable with it, quite honestly. Just not comfortable with this trade because they've been using the trend dots as support levels. This one just closed above it. So what are the odds of this one actually being a real bearish candle when in actuality they can just bounce right back up? The risk is too high. No clear path of direction. We move on. Euro pound. Actually, we looked at the news. Did we look at the New Zealand CAD? That was a real weird one, actually. It's been flashing left and right, and we've been avoiding it. Let's take a look at that. New Zealand CAD. Give it a minute. See, tonight is Chuck E. Cheese night. He loves Chuck E. Cheese. And then on the weekend we have Disneyland and Universal Studios planned. And let's just say the my knees are going to go out from all that walking. Okay, what do we have here? New Zealand CAD. Yeah, see, they signal was here to go bullish. They went, came, retested, hit it. And now, of course, liquidity is down. Why is it down? There's no volume. See? None. And if I want to, I can pull the volume indicator up. No volume. Very low. A lot of volume here, a lot less volume here, a lot more here. This one's basically just going to go long. Seems like the CAD's going to take a hit. So we evaluate risk. It's trading at 88.26. It just broke above 88.22. It's meeting a resistance level here. If it doesn't break above it, then it doesn't go any further. So do we take this trade? No. Why? Because this is a very key resistance level right here. They've made that very notorious. Even though it did, initiate a bullish trade, it hasn't followed through. So you wait. If you think it's going to break, then you take it, and if not, then you don't. I find these trades to be a little risky. I don't like to take them this way. I like to take them from the bottom. It makes me feel better that I'm in control. Again, I'm looking to trade on my terms, and that's what I teach you, to trade on your terms, not theirs. Here we would be trading on their terms, and I just don't like to do that. Now, once in a while, once a trade goes, then it goes. But in this case, I'm just not comfortable with it. It already went. We missed it, and it's unfortunate. We must continue. Pound yen. I'll take a look at that. The one thing that you have is time. Time to decide. Without it, you cannot assess risk. Again, that's what the regulators tell me to tell you. That every time you take a trade on, there's risk. Why? Of course there's risk. Because they themselves can't regulate what the banks are doing. Because they themselves don't understand it. Because their whole strategy is encrypted. And God forbid, why should they disclose such information to regulators? Then everyone would know about it. And then everyone would determine that the risk is too high. Well, I like it this way because that means that there's a very small pool of individuals that understand what we do, and that means that there's a very small pool of individuals that will make money. Everyone else is going to get slaughtered like pigs. It's unfortunate, but there must be a winner and there must be a loser. And if people are willing to go and listen to educators that don't know what the hell they're talking about, they deserve to get slaughtered. Now, here we may have a trade. Let's understand this. There's an imbalance. The buyers are here, the sellers are here. The buyers were willing to buy, but they didn't. They closed below. I'm looking for my trade. This looks to me like it's going to continue up. This would have been my trade. This would have been my trade. This is a little concerning. However, I will entertain it only because it's not too far off from where, well, actually it is pretty far off. You know, it's 20 pips far off. 15 pips actually. No, it's 20 pips far from here. That's a pretty deep risk that I'm not willing to take. I'm willing to take 10 pips risk. I got to stick by my rules now. If I don't, and I violate them, then at that point I deserve to lose. We can't violate rules. So there's too much risk in this one, inherent risk at this right now. You know, they did break below this pivot, which is good. This one is broken below the trend dots, which is good. Looks like they're going to continue to come down. I guess I'm willing to risk 5 pips. If I know what I'm getting into, then I know what I'm willing to and not willing to risk. Looks like the yen is going to get stronger. Let's see. We'll give it a chance. If it plays out, it's got to come here to 154.10. You know, from where it's currently trading, we'd pick up 27 pips, which wouldn't be bad. But again, understanding the risk is very key at this point. See, this is from our entry, this is 5 pips. You know, okay, it closed below. Closed with bullish volume though, don't like that. So this next candle is very crucial. We still have volume divergence. Let's see. Let's see how far they trade away from the mean. What's the mean? At this point, it's the 50. But they use the 200, the 100, and the 50. It has negative volume. Let us expand this out. Let's put this up here so you can see it. This candle has 26 on the buy, 31 million on the sell, 28 on the buy, 30 million on the buy, 31 million, now it's even, 32 to 31, 32 to 33, 35 on the sell. And again, it's so beautiful to see how the volume comes in, but more importantly, it's to see how price action reacts to the volume coming in. And that's when you see who's in control, who's in real control. Is it the buyers or is it the sellers? $43 on the buy, 45 on the 46 on the sell, 47 on the sell, 44 on the buy, but you know, they're really having a really hard time breaking below that, below our entry. Let's see. 45 on 47 on the buy, 51 on the sell. Come on, make the move. Make the move and put a smile on our face. Again, pure mathematical reasoning, pure chess. Pure chess. Nope. Normally I'll give it 2 candles. If within 2 candles I don't see what I'm looking for, then I'll usually just exit. Why? Because I'm looking for a specific reaction. If I don't get the reaction that I want, and it's not on my terms, then I won't stay to trade on their terms. So this would be the last candle that I give them a shot at. Again, all the news is gone. They've already made their moves, rebalanced their books, and they may not want to do anything else after this. And they usually do that in non-farm payroll. The first hour and a half is very key, then after that they just sort of become very sluggish and they say, we did what we needed to do, it's time to book, the weekend is coming, and they look at it from a very, very, very simplistic way, which is how we should look at it as well. But the robots are still trading. So we're at break even. No, we're down 1 pip. Break even, down 1 pip. Come on, take it down, make the move, finish it off. Okay, let's see. No, still nothing. Very, very, very just sluggish. Now they do this sometimes as well. They will just hold, do nothing. Oh my God, we just went green. Is it possible? Are they going to give us what we're looking for? All right. Let's see. 4 pips, 3 pips, 2 pips. Is there a pivot here? 1 pip. No pivots. Oops, we're in uncharted territory. Oh boy. One pip, 2 pips. Nothing. 3. Come on. Make the, they're starting to make that move. Let's see. 6 pips, 7 pips. Keep going. Ooh, there it is. See? They don't disappoint. But they're very deceptive of it. Now, if this thing doesn't come down another 10 pips, then I'm out. I'm looking for 15 to 20 pips on this thing. Know what you're going for when you're in a trade. What are your expectations? The pivots will map them out for you. They'll give you expectations. If you understand that, then you won't fear and you won't leave money on the table. You won't say, oh, I could have made more. No, you will make more. Let's see what this next candle does. This would be the one that we like. Again, we're up 10 pips on this right now. 9 pips, 10 pips. But if it doesn't give any more, it doesn't give any more. And again, they'll do it very slow on purpose because they don't want you to win anymore. See? I'd love them to come right here to this pivot. Come on down. Come on, that's another 10 pips. Come on down. Put a smile on our face. We'll make it simple for you. Keep going. You know, one thing I've learned about trading in all this time is that patience is a virtue. They test it. It's really despicable how they do it. So they hit my mark. So the question is, do I stay or do I go? Knowing that liquidity is down and that it's the end of the day, if they've hit my mark and I don't need to prove anything anymore, sometimes I'll wait just to see if they're going to continue. And if they break that pivot, that means they got to go to the next pivot. You know, again, that's human emotion getting in the way. The smart money basically says, take it off the table. You got nothing more to prove. If you get 2 of those trades a day, you win. Did we lose today? No. Did we win? Yeah. It wasn't a great trading day. Could have been a better one, but we got into this late. You know, we couldn't find opportunities that we were looking for, and we were looking to trade on our terms. Finally, we found a trade that was on our terms. And that's all. So I don't have, oh, look, they're going to continue. I'll see how it just bugs when they do such a thing. And that thing probably will come down maybe a little further. You know, if it does break below this pivot, anticipate 153.84 to be the next level, because they do such a good job of mapping it out. I just wasn't willing to wait any further. So if you're in the trade, then you're up a lot higher than I am right now. So that's all that I have to share with you guys today. I don't have much more to share because I don't think there's anything more to see at this moment. I want to thank you very much for joining us today here at Phoenix Trading Strategies. I hope that you can join us on Monday, which will be much more exciting, I promise. We'll have normal trading. In the meantime, have a great weekend. We'll post the video on YouTube so you guys can take a look at it. And we'll send you out an email over the weekend. Have a great one. And we will see you Monday morning, same time, 9 a.m. Eastern. Thank you for joining us here at Phoenix Trading Strategies. Have a great, great day and a great weekend. Bye-bye now.